Assalamu Alaikum everyone, welcome back to the channel. In this video, we will discuss 3 undervalued halal stocks that could be a great addition to your portfolio. We will discuss the reasons why I think they are a buy. And one of these companies will be a growth company, the other one will be a dividend king, and the other one will be a high growth company. And this is my portfolio, what you see at the moment. And what I'm going to show you now is the 3 companies. So that we're going to look at the first one we're going to look at is the dividend paying growth company. So the first company we're going to look at is Broadcom. Broadcom, in my opinion, is a growth company with excellent future ahead of it. It also pays excellent dividend. Their dividends is probably one of the highest in the tech industry or the tech sector. So they're currently trading $474 and their market cap of $189.5 billion, a yield of just over 3%. Their PE ratio, forward PE ratio, is about 17.68 at the moment. Probably one of the lowest when it comes to the tech industry, tech sector, if you like. This company is a semiconductor company. They also do a lot of networking and Wi-Fi and so on. They have actually struck a deal with Apple last year, where Apple will pay them about $15 billion to provide Wi-Fi and Bluetooth for their mobile phones. So they have, and Apple is not the only customer they have, but they're basically one of the companies that they closely work with. So they provide all the Wi-Fi and Bluetooth for all the Apple products that you see on mobile phones and so on. So it's really good to see that they're not just a basic company, if you like, a company that actually has been relied on to provide iPhone parts. All right, so quickly we're going to look at their this is basically their latest earnings report. And if you look at it, they've got net revenue of $17.4 billion and total revenue of $23.8 billion. Now, if you look at their total cost of revenue, so this is how much they spent to make this. Okay, so they spent about just $10.3 billion to make $23.8 billion. And if you look at it from last year, 2019, they were making about $22.5 billion to, this year, as you can see, is 23.8. So the net revenue is growing. And when it comes to total cost, also obviously is growing a little bit. But one thing I really love about this is if you look at their gross margins, which is about 13.5 this year, and last year was 12.4. So total, basically, overall, the company looks actually really good when you look at their financials. If you look at their, obviously the annual, just what we were looking at, but the presentation. By the way, some of you were asking where I get this from. This is if you go to investor section of each company that you want to invest in, you can find all this information. So this is the presentation and this is the actual report. Okay, so you can see both. The actual report is quite long. It has basically descriptions and all that stuff, whereas the presentation is kind of straightforward. You see graphs and kind of colorful, if you like. Okay, so the total net revenue, as you can see, is growing from 2016 to 2020. The gross margin basically is growing. The adjusted in EBITDA is actually growing, as well as the free cash flow. So when you look at this and you realize that, how healthy the company is, and the fact the company is undervalued at the moment, so it's about almost to 21% undervalued. Okay, so the share price apparently is supposed to be about 600 per share and currently trading, I think, 474. So it's got a long way to go. On top of that, you get a dividend that is 14.4 basically annual per share. So every share that you own, you will get $14.40. And their payout ratio is basically way less than 61%, which is basically what some of the analysts suggest. And basically 5-year growth of 50%, which is really crazy because not many companies do that. And when you look at this, look at the common stock. So from $1.92 to now $14 140. Now, the reason they can do that is because of their revenue, because when you look at this and how much they actually got free cash flow, they're growing, their free cash flow is growing massively. They are giving back to the, obviously after research and development, they obviously giving the rest as a free cash flow. I don't think they do a lot of buyback shares, but it's really good company. Have a look at this if you're interested in the if you basically undervalued when it comes to the the tech sector. This is probably one of the greatest companies to look at. The final thing I want to show you is this. So currently is a buy. Okay, according to Yahoo Analyst, basically they recommended their recommendation is currently a buy, so which is really good to see, and is a company that is undervalued, has so much. When you look at their future, for example, growth of almost to 26%, as well as if you look at their financials, okay, you can see they have more assets, long-term assets, and more as basically short-term assets than liabilities. All right, so the second company we're going to look at is Proctor Gamble, and this is a dividend king. This is a consumer packaged goods company. They do a lot of home care, cleaning, beauty, grooming, personal care, and all sorts of things. Gillettes and Head and Shoulders, Pampers, that you name it, they sell those products. Currently trading $128 per share, market cap of $316 billion, and yield of almost 2.5% at the moment. Their PE ratio is about 22.5, which is not basically too expensive at the moment if you look at the industry overall. All right, so let's have a look at their financials currently. So their revenue recently, the one that we basically June 2020, basically that came out basically June 20. I think it's about 4 weeks ago anyway, that they basically released their latest earnings. And if you look at the total revenue, you can see the total revenue is growing. Just revenue is growing. Total revenue is definitely growing in the right direction. So $71 billion. And cost of revenue, so this is how much they spent in order to make that, is about $34 billion. So to spend $34 billion to make $71 billion, that's great. So gross profit of $36 billion, $36.3 billion, which is really nice to see. Okay, the next thing we're going to look at is their balance sheet. So straight away, we're going to go down to total assets. And when you look at it, it's $120.7 billion of June 2020. And when you look at their liabilities, total liabilities is about $73.8 billion. So they have a lot of money in the bank to be able to, if anything happens, God forbid, if anything happens to the company, they can straight away use their assets to offset, some of their liabilities. I mean, if you look at this in the simplest, Wall Street is undervalued by about almost 20%. Future growth of about 5%, which is not bad. So this is the type of company, you don't expect them to grow 20%, 30% every single year. It's about 5 to 10%. And obviously that cash flow is really important to investors that invest in this type of company. And as we saw before, they have more assets than with long-term liabilities, which is great to see. So the final thing we're going to look at is their free cash flow. So this is the cash basically the company generates in order to pay, dividend, in order to pay. So you don't want a company that doesn't have a good free cash flow that's growing every single year. So from 9 billion to 11 on almost 12 billion there, almost $14.3 billion to $16.2 billion. So that is growing, and it's really lovely to see that, because that means they can pay you basically dividend for a very long time, and you don't have to worry about that at all. So final thing we're going to look at is where this company is, what the analysts are saying at the moment, and it's a buy at the moment. Okay, so basically the average will probably be about 151, currently trading 128. So if you were to buy it right now, the price appreciation as well as the dividend, as well as that that dividend that you get every single quarter will definitely give you a extra money, extra passive income that you can rely on. So the final company that we're going to look at, Salesforce. This is the company that develops enterprise cloud computing solutions with focus on customer relationship management worldwide. They're a really good company. They actually work with a lot of the, the so-called big companies and top 100 companies around the world. And what they do is basically they work with the company. They provide cloud services. They actually look at the customer data. They analyze it. They help the company to retain their customers and basically show them any trends. So they're analyzing the data they're collecting from the customers, and they help in basically the customer experience. So the company, basically these people can come back and buy more products from the company. So everything they do is basically related to the customer relationship management side of things, which a lot of companies obviously rely on, because if you have a good fan base or customer base, that will be, because remember, there are a lot of these tech companies is subscription based. So you want to have basically the best product out there, so you can actually get these customers back again and again. And this company really helps these companies to maintain those customers. As you can see, it's currently trading $212. The market's closed at the moment, so that's probably why this is not moving at all. But this was based on yesterday. Today is Saturday, so Friday. Currently, the market cap is $192 billion, and the company basically for the 52-week high of 284. As you can see, it's been going down for a while. Especially if you look at the last 6 months, okay, it's down about 12%, and then for just this month, it's down about 13%. And for the year is obviously up because of what's been happening with tech and so on. It's been up for a year. But if you look at the last 6 months, it's down about 12.6%, which is, for someone like myself who's actually got a few shares of the company, this is a very good news for me. All right, now we're going to look at the basic latest earnings. So if you look at this, is for 3 months. This is for the basically fiscal year. So total revenue is $5.8 billion. Total cost of revenue was about 1.4, let's say 1.5, and total gross profit basically of $4.3 billion, which is really nice to see. So this is one of those companies where when you look at the tech sector and you look at the how much these companies go up every day and how much they go down, some of these companies do not actually make any profit. And this is really nice to see. The company that has been around for a while, they actually make a really good profit. So if you look at how much they actually, in this just this quarter, they actually basically made $5.8 billion, okay, and only spent about 1.5, and actually their total gross profit is $4.3 billion. So this is really nice to see that financial side of things. And one other thing I want to show you is their current liability. So the current assets has been growing. So at the moment they've got $66.3 billion, and their liabilities, or total liabilities, is about 24.8. So 24.8 in comparison to 66. So they can actually, they've got a lot of money. Basically they've got a lot of money in the bank to be able to, and they recently bought a company called Slack. Okay, so this is a great acquisition, and I really like the fact that they bought this company, because Slack is I think it will complement what they've already offer. I thought Microsoft will buy Slack, but I'm glad my Salesforce end up buying the company, because they're really good companies, so they will definitely complement each other. So the next thing we're going to look at is the valuation of this company, and as you can see, is 18.2% undervalued at the moment. Fair price should be about 259 at the moment. But at the moment it's only $212. If you look at let's have a look at their future growth. So what analysts have said for this year. So if you look at for the next 5 years, they're expecting basically the growth of about 13% for the next 5 years, which is really nice to see. And if we go back to the top and just have a look at the revenue growth, okay, so for this year they are expecting about $25.7 billion. Last year it was $21.25 billion, and that is basically sales growth of the year. Estimate figure is up basically about 21%, and then the following year about 18.9% up. Currently it's a buy, trading like we said 212, but they basically thinking it might go up to $275 dollars per share. Okay, so again, really good company. I think I've got 2.5 shares of this company. I'm adding to it as well as much as I can. As soon as I get my ISA, I'm definitely going to buy a few more shares of this company. You know, although I like my dividend paying companies, but also the growth companies are very important as well, because some of these companies, I'm sure Salesforce sooner or later will start paying dividends, but they have really great balance sheet. So that's why I'm basically betting on this company, and hopefully we'll see how it goes in the next few years. Now, thank you very much for watching. If you made this far, please subscribe, like, share with your family and friends. There's a lot of people watching the channel at the moment, so thank you. I really appreciate, and I appreciate how fast there's about 300 people actually watching, that subscribed already. So let's just get out there. Let's just make sure that we get to as much as we can and help as much as we can. Listen, everything I've said today, all the companies that I've talked about, is companies that are in my portfolio. Okay, even though I can't show you right now because they're not in here. Some of them actually, Broadcom is there, as well as the Proctor Gamble. I've got them both in here. I'm doing a quick portfolio overview today or tomorrow, and then I'll share that with you over the week as well, because I've made some change to the overall portfolio. But I've also got another portfolio where I have Freetrade, and I'm basically, the Salesforce is actually in that account, as well as Taiwan Semiconductors and other companies as well. Thank you very much for watching. Assalamu Alaikum.